Hi and welcome to this week's video analysis for the week 25th of February 2019. Going to start off with euro dollar. Going to break down through the various FX majors, just highlighting what formations and what sort of break levels and support levels we've got this week. Now, we're expecting trading to remain pretty mixed and volatile. We're quite close to some support and resistance levels, and if they don't hold on Monday, then I think we could see the potential for a move higher in the dollar index and a move lower again in euro dollar, sterling dollar, etc. So just going to break down the time frames and basically highlight what we're seeing first. Euro dollar, we believe that we're forming a head and shoulders pattern, reverse head and shoulders, so left shoulder, head, right shoulder. However, we have to see price action close on Monday above 113.40. Otherwise, basically this formation I think is going to break, and we're going to see a bigger sell-off towards this level, which is the AB equals CD formation target at 1.1165, and then possibly down to here, which is around about 1.1120. That then looks to be forming an ending wedge pattern. We'll then expect to move to the upside. So we can basically see for the last 3 days of last week, we closed little net change, rally sold, dips bought. There's no real emphasis and chart formations that are really strong in either direction at the moment. Sterling dollar, and we're going straight into the daily chart here. Again, we saw 3 days of little net change. The dip was bought on Friday. The long-term bias is still bullish, but I'm now considering whether or not we're going to see a stronger correction to the downside in an AB equals CD formation. Bespoke support is located at 112.65. Now, as long as we get a monthly close above that level, then the medium-term bias still remains bullish. So there is scope for a move in either direction. Like I say, long-term bias is bullish. We'd like to buy into dips at lower levels if they happen, basically. And one chart as well which sort of highlights the scope for further dollar buying is dollar Swiss. And really, if we look to this time frame here first, this is the weekly chart. Here we can see an ending wedge pattern, but what normally happens is we normally hit the trend lines 3 times. So you can see the trend line to the downside has hit twice, 3 times. To the upside, we've only hit this trend line twice. I don't think this one counts, it didn't hit. So there is scope for a further move to the upside. And if we go to the intraday chart, this is a 4-hour chart, we can see pretty mixed volatile trading to the downside. This I struggle to see as an impulsive wave. The pair has to stay below 10010 on Monday, or close below that level I should say on Monday, to hold a bearish bias. We've got a 261.8% extension level at 99.58. So even if we do hold below that level, I don't think we're going to extend much further to the downside, at least in initial trading. Dollar yen, again, very mixed trading, closing with mild ranges for the majority of last week. It's got to stay above 110.61 early on Monday to keep the bullish bias alive. Really, sort of buying dips down towards the trend line. Would prefer to sell rallies up around here, which is a 161.8% extension level. Comes in at 111.83. It used to be support, it now becomes resistance. We've also got channel top located at 112.06. So again, signals are really lacking strength at the moment, with no real clear direction in this major currency pair. I'm showing this time frame here for dollar CAD, and again it sort of swings to the upside, but we really need to see a break. This has the potential to be a bullish reverse head and shoulders, so left shoulder, head, right shoulder. Could move lower. Shoulder support really around about 131, the figure. Again, the monthly chart being important here. We need to see a close this month, so it'll be end of this week, above 131.56. If we do see a close above 131.56, then I do think that this formation will play out and we'll get a stronger move to the upside. I don't believe that we're necessarily going to take this high, but I think this is the first leg lower. This is the choppy corrective leg to the upside. So 131.56 being critical this week. Aussie dollar, and again, wedge breakout. This is sort of highlighting stronger US dollars, not Aussie dollars. We've posted a bearish outside day, posted an insider Rami on excuse me, on Friday. Got to stay below 71.63 on Monday to basically push this pair down to this level, which is 70 the figure. So at the moment, we've got a mild bearish bias. It didn't hold our first big spokes resistance level on Friday. 71.63 being quite critical. Euro sterling, and again, looking to the big picture, the medium-term bias remains bearish as long as we close this month below 88.61. Mixed trading for the last 3 days of the week. We've posted a DMARC 13 count to the downside. That normally highlights that we should see at least a correction higher. I think dips will probably be bought into on the back of this 13 count, but then rallies sold into. So short-term bias is mildly bullish. Long-term bias is strongly bearish for euro sterling. Euro yen, again, sort of lacking any sort of clear direction. We're posting this wedge formation that normally highlights limited clear direction to the upside, and we keep on missing the sort of the trigger levels. 126 the figure. We've got some bespoke resistance this week. 124.75 looks like a wedge break point. If it does break there, then the measured move to target is down towards 122.60. Okay, I hope that you find that video beneficial, and we'll speak to you again soon. Many thanks. Bye for now.